Going public is one way to raise capital. And I mean, ultimately, when you take a venture investment, you're signing up to try to create value for the investors and yourself. There are only two routes to do that. You either go public or you sell the company. If you want to build an enduring company, going public is kind of how you do it. You know, you're Mark Zuckerberg at Facebook, not Kevin Systrom at Instagram that's now managing a division of Facebook. The first financing I ever did was taking OpenTable public in 2009, and for those of you who remember the market in 2009, it was just dismal. I mean, the tech press was saying the window's closed, you know, there'll never be IPOs again. And so we went out into that market, and I mean, it was a fascinating experience. It turns out the tech window, you know, the investors were very happy to invest in a high-quality company, even in a very down market. I think being public helps you build discipline at a company that is really useful for the company in the long term. You know, ultimately, value creation, you know, the value of a company is supposed to be reflected with the value of its future cash flows, which implies that if you want a positive valuation, you should have profits at some point in a company's life. I think this market allows companies not to build that discipline for longer. We're also very intrigued in fintech. I mean, you mentioned that. Our newest general partner is a gentleman named Alex Rampell, who founded a company called TrialPay that recently sold to Visa, which meant he's now available. And he knows. I managed PayPal for a few years. He knows more fintech. He's forgotten more fintech than I've ever known. So it's great to have a partner like that aboard. You should check out some of the U.S. regulation. Yeah, the response to the banking crisis has created enormous fintech hurdles all over the place. London responded differently.